Hey traders, Nick Shaheen here for MarketFi, Benzinga. Created income with option spreads on MarketFi. Sorry about that. Pretty good week, another good week, I should say. Before I go on, if you want to know how to reach me, you can either follow me on Twitter. You can see my handle right here, or you can send me a direct email, which is sellspreads@gmail.com. Or probably the easiest way and most direct way to do it is through MarketFi website. If you're signed up already, you don't have to pay to sign up, but you can also track me um, with creating income with option spreads. You can page through their website and you can find me there. All messages will get answered promptly. So, what happened this week? Much ado about nothing, although a lot have happened, right? So, what I've been saying is, let's recap. First of all, I want to recap the day and the week that ended in June 27th, and also preview next week, which is a short week because of the holiday in the US. So what really happened? We're still in a stalemate. That's what I've been saying. We're in a stalemate. Well, things are wild. Yes, they are, but they are range bound. What does that mean? Well, they're range bound as in like we have very defined ranges that are playing out, and every day I send out the levels to the members, and they hold up. So the levels are predictable. So how can one make money off of that? Let's start backwards today and see how we're going to make money. How I can make money is whenever I have a stalemate. People say, well, by the way, I do like to sell spreads, so I sell premium. But then they tell me, well, the VIX is at all-time lows, volatility is so low. How can you make money? Well, maybe the bang for the buck is not as big as if the volatility is through the roof, but then the risk is not there either. So I can make money more confidently. So I don't mind taking a little less premium per trade, fully knowing that I do have more ranges to trade. So, for example, I can scalp a nice iron condor that would be tighter than usual on the SPX. I can probably hedge it with a little position in the IWM, like I did. If you follow me, you've seen a nice play that happened in this week and the last couple of days. It's unusual for me to try to play credit spreads into the expiration, but I did that this week. And a couple of days ago, into the close, I shorted the SPX. I believe it was 1970, 1975, meaning I sold the 1970 call and I bought the 1975 to limit my risk exposure. I collected 70 cents and I turned around and opened an order to close it at 50 cents thinking I was going to scalp it, not ever thinking it was going to fire, right? So I went and hedged it with an IWM debit put spread. I'm sorry, credit put spread. So long the IWM, which is a small caps, and sure enough, I took the order fired off on the 50-cent close of the 70 cents, the one I just opened. So now I ended up with nice, booked some profit there, but I ended up long the IWM. But long story short, I was still confident of the levels IWM. And so I didn't close it, and today it was worth pennies, so it was almost a max profit there. And also, meanwhile, that when I shorted the SPX, I also went long the SPX on the whoosh down at 1925, 1920, which was so far out of the money, and I scalped a few points there. So the bottom line is, with the right levels, knowing the levels in this stalemate, yes, volatility is not that high, I can still make money selling spreads. And that's the moral of the lesson. I don't follow the herd because I have levels. I don't chase up or down. Wishes up and wishes down, and rallies that are unworthy. Like I can't explain the rally for Apple today. I can probably write off the rally of the small caps to the huge imbalance that apparently was going into the close because of the rebalancing. So Monday will true us up and see what's what. So today everything was green. So why didn't it feel more bullish? To me, it didn't feel bullish at all. First of all, the Dow was almost flat. The SPX was up a little bit, like 0.2%. The Nasdaq like 0.4, and the small caps ripped. That's okay, fine and dandy, usually under normal circumstances. But in this environment, It didn't feel right, and mainly because I was looking at the momentum stocks, and a lot of few important momentum stocks were not participating. As a matter of fact, I think it was Amazon, Priceline, CMG, Chipotle. These are important momentum stocks that usually run ahead of everything, and they were red with like 15, 20 minutes to go in the market. So I don't know if they ended up red or not, but the fact that they were red when the markets were ripping, ripping, uh, worried me a little bit. So where is the real risk appetite for real risk? Because if there was blind appetite for risk, which is probably a good thing for the bulls, then they would be buying froth left and right, perceived froth, I should say. So this is the story as far as today. As far as the week, we had indecision. So let's look at the ES. The last couple of days, whoosh down, nice recovery, okay, and that was on like Fed speak. But we've done that twice already, and I'll bring that up a little later. And this morning we opened down because of a whoosh overnight down, and then we rallied up, and then we sold it, and then we ripped right into the close and unexpectedly. So let me see if I can grab another day. Maybe 30 minutes will bring it. I don't want to reset everything. So what's today's date? 23rd, 22, 20. Anyway, so let's grab the last few days. If you can see here, we ripped up and then traded, and then we tried to rally, but then I said the bulls are doing just enough to keep us in check this year, to remind us that it's not 2013. It's just enough to keep us in check. So we meandered after the rip up, and then we on the 24th we just fell hard and gave it all back. So erased this whole thing right here, and then rallied up, and then gave it right back, and then rallied and give it back. So that's what I mean by stalemate, okay? And it was clear going into this week that the battle zone is 1950 SPX. That was very clear. I put it on paper in writing, so I'm not making it up after the fact. 1950 is where the battle zone was. And today, sure enough, as soon as we ripped up in the morning, they brought it right back down to 1952 or something like that in order to flush probably all those positions for a little cheaper than they would have had to. And then after that, I said, after here, God knows where we're going to go. So the levels held up into half of the day, and then after that, it just traded on its own merit or momentum. So the levels still, the bears have not given up the $1,900 line for July, for example. I think they still want the battle to be 1900 to 1950. Whether they can do it or not, that remains to be seen. Maybe next week will be a pretty good determinant of that, which just probably stems from, remember how we were fighting the $1,900 zone? SPX, I'm continuing to cover the SPX here. 1900, we fought, and then boom, broke out of the 1900. And I bet you caught a lot of bears short there, and they rolled a lot of positions into going out times. So that's probably why they still haven't given up the $1,900. And it's not that far off. We could get down there. All we need is one decent bad headline and snowball down. I'm not foretelling doom or anything, but this is my impression of what's going on. Again, I am Main Street, not Wall Street, so take it with a grain of salt. IWM this week, I told you we traded it really well, and I said, well, the 117 is going to be really good defense, and it's proven itself. Even on maximum doom, it recovers right back to it. And this morning we opened and we fell down straight to it, and guess what? Almost to the penny, bounced at 117.02 or something like that. So held. I had an open position down here, and I didn't budge, and then the whip right up, and then the position was pennies to close. So the 117 held up. Next week I will update the levels before the open on Monday. Members will get all the new levels for next week, and we'll update them daily, and they'll come into email. So if you want those levels, hit me up. You have to be a member, obviously, but first step is to get in contact. And right now I have a special going on, so if you're interested in that, let me know. I did tweet it, so look me up on Twitter. You can see the special and the link and sign up. So the stalemate continues, and you can still make money off of it. How do I make money next week? You sell premium provided you're nimble enough to get out in case on Thursday, although it's a short week, I don't think we're going to be able to scalp the fact that, okay, we've got one less extra day so we can have some premium decay. Everybody mentioned, oh, it's going to be premium decay. I just don't see that happening with having Thursday with a jobs number. I think premiums are going to stick around because of that event. So I'm not sure I subscribe to that part. I'm not going to set trades just because it's 4 days. So if I have decent, clear levels, I'll set trades. Otherwise, I'll sit it out. I don't care. Or I'll go outside of that week and then higher away from price and try to scalp that way. You can do that. I showed you how I can scalp with leaps, selling calls and puts on leaps and fast movers like Priceline, for example. So Google this week had some pretty amazing moves. The last couple of days were a little shady. This morning I noted a Apple Google pair trade resurgence from a while back. They used to every once in a while have a one whooshes down and one whooshes up exactly at the same time. So look at my pen right here, whoosh down in Google, and look at exactly the whoosh up and at the same time whoosh up in Apple. So maybe some 13F information will come out and tell us, oh, this is what happened that day. Not sure. And then it happened reverse towards the end of the day. So I'm not sure what the heck was going on there. The idea that one less day would be able to let me scalp some decay, premium decay in credit spreads or credit that's straight up sold puts and calls, I don't subscribe to it next week. So be careful with that. So what would scare me next week? I do have a few headline risks. Not that they're going to happen, but at least I'm watching them. First of all, other than the obvious, we can always have any kind of headline from the Asian markets. For example, some sort of a shady deal going on in China that you heard about as far as loans against some assets which may or may not be there. Three other main headlines that are unusual. One is a long shot headline risk from Argentina. I think they have a deadline coming over the weekend, if not over the weekend by Monday. And I don't know if they're going to be the word default in it or not, but last time that happened, the markets had a little tizzy. There's an Ukraine deadline on the ceasefire. If not extended, then what? Is it open to something going on? Not sure. That's why it's called a headline risk. And then some issues from the Arab world as far as the movement against Syria and or Syria bombing or not bombing Iraq. So a lot of murky situations. These three are major headlines that unusual and not usually and don't. They're not of the usual set of, oh, if we had a bad thing go on in Japan or China, then these are one-offs. So what's the conclusion? Just stay nimble and don't get married to the trade, and definitely don't exercise hopium. If the trade starts running against you, either have it hedged and close the whole thing for even or small loss, or just close it for a loss and move on, live to fight another day. So I'll give you an example of what's going to happen. The stalemate goes on until it doesn't, right? Which is pretty genius of me to say. But here's what I can visualize it for you. Let's say you need a headline that's big enough in order to create a snowball effect that's big enough to start building to where we can't bounce. Okay, I said we bounced really well this week, right? So we did bounce well this week. Like this was a good bounce, and we did it twice, I think. Let me see here. We did it twice, 2 or 3 times this week, and two times at least. There's one, there's two, and we bounced hard. So we can do it. But what if the headline was big enough to where it freaks us out and discombobulates everybody long enough to where the bounce doesn't come so quickly, and the longer we don't bounce, suddenly it starts basing from there and just building on itself. What could get us there? Let's say, I don't know, Thursday, the jobs number, everybody's expecting 200 plus, everybody's so anticipating. What if we come out with 85? What, you say, under 100,000? Yes. What if we do come out? I don't want it to be that, but what if it is that? I don't know. I'm just throwing out situations where we can build it a headline strong enough to create a snowball effect. Or, conversely, what if it was 350,000 or 400,000? It could happen. I don't know. It's just a it could happen. And if it does happen, boom, we pop off to the races. Now, which one am I scared of more? If I was short or if I was long. If I was short and I see a pop on a 300 plus thousand jobs report, I know that it's going to run, and but it's eventually people are going to start talking about, oh, wait a minute, things are too rosy. Then maybe Yellen 6 months said maybe she's going to tighten this year. So good news, bad news thing going on. So yes, I would be scared of a pop, but I know that it would have limited length as far as durability. How long is it going to last? As opposed to boom, under 100,000, it could create a whoosh down. And then if everybody's waiting for this, one thing we learned today from these big whooshes down is that the bulls are weak hands. I don't know how many of them are, but sure, a lot of sell buttons got hit pretty quickly on a fairly mild expected Fed hawkish speak. So they might be too weak to hold on, and if they are too weak, they start pushing and pushing and pushing, and everybody heads for the exit. And even though the headline is not that bad, because after all, a weak jobs report means that she's likely not to tighten, but maybe we don't slow down enough to even think that. So I'd be scared more of a whoosh down than a jump up. But we will determine that next week, at least the reaction to it. The number itself is one thing, the reaction to it is something else. Just like earnings, I say you can nail down, you can have insight, you can have a copy of their P&L and still not guess it. And it would still be a 50% chance of you being wrong as far as what position you take into anybody's earnings, because you can never forecast how the market will react to such earnings. So this is it as far as the general, the macro of it. Okay, I always preach that you have to start with the macro. And if you start with the macro, then you can build on the micro. What to do? I mean, you can do few things. Caterpillar, I love to short that guy. I don't know why. He just calls me to short him all the time. So if you are, if you want to short the market, pick on a few weak tickers. It showed a little weakness today, and maybe I want to pick on it on the short side. Other stuff today, like I think FFIV was pretty strong, yet VMware wasn't. So I'm asking myself why. Usually they trade in together. So maybe it's head and shoulder-ish, and maybe it's looking to come down to the low 80s. I'm not sure, but it showed weakness. Anyway, it's at a point where you can probably pick on it a little bit. Amazon, I mentioned, it was a little weak, even though, pretty tight. I don't dare to short this guy via credit call spreads, but it's at a level that I've mentioned over and over again that is pretty important. See that solid red? So you pick your thesis there, and maybe you place there's a down channel, maybe we'll break out of it. If I see it come to 330, maybe off to the races again. But if I see it limited on the blue line is not scientific, by the way, I just put it there, then maybe it breaks down a little bit. So be careful where you take your bets, but making debit spreads and give yourself room to be wrong a little bit. Okay, I picked on Apple today. I usually play it long into the earnings, but I picked on it today, so we'll see if I'm right or wrong. I also picked on a few other things which I won't share right now. Let's see a few other let's see, momos, just to see the spirit. Things that make you go Priceline. Priceline is disappointed me today. Gosh, it came up to 1230 something, and I was looking to see how it was going to do at 1235 to see if I'm going to short it again. I shorted it right around here with straight up sold calls, but they were leaps and made a ton of money on it per contract. And I was looking to rinse and repeat, but it didn't come close enough for me to trigger it. So it broke my heart by not reaching there, and I exercised discipline not to chase it into my own trade. And also, one of the members asked me if I could trade, find a couple of trades for Visa and MasterCard. I couldn't find anything for MasterCard that I like, and they were looking to do some leaps, and I came up with a couple of trades that you can find online to kind of do not an iron condor, but some sort of a short strangle, but really wide, and using January probably, which would be good for taxes for my purposes. and wide enough to build a buffer and still collect some premium and have some good risk reward there. But those are always risky. The Nasdaq today showed some initiative, and it showed like it had a little breakout, so we'll see where that leads us. And the small caps today were obviously strong, but range bound. Looking to see it has poked over my blue line, which again is not scientific, okay, but it's still squeezing and trying to take another leg up. I'll believe it when I see it. It peaked up here, and I want to see it repeat that and close at or above that level right there, which is close to 1200. So it's to me, I'm not a technician. I do use technical analysis to not to find trades, but to guide my own trading, entry points and exit points. It's kind of like a consultant, so I don't usually just jump in based on something technical, unless it's a lotto ticket, which I do every once in a while, and this is not it. The VIX today got clobbered again, but at least we're not down to 10 levels, so we have a little room for to be wrong, and I can see lower highs and higher lows, so we're going to come to a point and then decide up or down. Well, down, where to? Multi-year lows. Let's throw 5 years out. Nope, that's still not good enough. So it's going to have to repeat something it's done in, is that 9 level? Yeah, so 9.5 level, and that is way back in 9.8 level in 2007, February. So I usually bet against such odds. So I'm going to say that we're going to probably see the VIX come up a little bit, although I won't trade it because I don't know how to make money on the VIX. I really don't. Even when I pick it right, I just don't get the right premium. So that's it. Baidu, I haven't traded in a while, and Netflix I haven't touched, although it's tempting me to short, but it also is looking like it's going to break out. So we'll see what happens. A friend of mine told me that he's looking for it to break out, so I'll trust him. Plus, I'm short enough. I don't want to be short everything. I am short enough stuff, and being short one more thing is not that exciting for me right now. I'm short some stuff against some longs that I have. I am long Google, and when I short stuff, it's usually to offset some longs and to build myself a buffer. Darn it, I exceeded the 20-minute limit. I rambled on. I do appreciate your time. Hopefully I gave you some added value. If you have follow-up questions, please do not hesitate